Well, HDFC Bank declared its Q1 FY24 numbers, and let's try and break those numbers down. First off, let's try and understand that this is not the merged entity. This is standalone HDFC Bank. Of course, the merged entity will start declaring numbers, combined numbers from Q2 of FY24. So we'll wait for that, but let's first start off with the performance of HDFC Bank itself. We're looking at net interest income, which is the difference between all your interest incomes on the loans given, less all the interest expenses on the deposits, as well as the loans taken by the bank, which then are lent out, which is the money is used to be lent out. That net interest income is the first component of operating revenue that's coming in. So you have that coming and growing a solid 21% on a year-on-year basis, largely in line with what the street was estimating. And the metric to measure that is your net interest margins. Your net interest margins have remained largely flat at 4.1%, and we'll come back to this. So remember this metric, 4.1% largely flat is where the net interest margins are at. Let's quickly move on to the other income, right, which is also operating income, but it's other income. Other income largely has four components. You have fee-based income, right, which is loan origination fees, credit card fees, and the like. You have dividend and recoveries. You have forex income, forex-based income, and then you have mark-to-market or treasury gains and losses. Now, outside of the one-offs, this amount has come in at 9,320 crore. The consensus expectation was around 8,000 crore. Now, let me exclude the one-offs. Excluding the one-offs, this other income number has grown 16% on a year-on-year basis. So that's where the other income is. Outside, including the one-offs, it's gone up by a solid 45%, but that is because the treasury losses were there in the base year, which is Q1 FY23. Now there are treasury gains, and hence you have this kind of very large difference between last year as well as this year. But even sequentially, it's up a healthy 5+%. So definitely a positive coming in there. Now let's talk about operating expenses. Operating expenses largely branches, employees, and tech. Now these operating expenses have gone up by 34% year on year. So the income largely growing at 20 to 25%, and you have expenses growing at a very, very healthy clip, 34% year on year, because branch expansion is happening at scale at HDFC Bank. You have 23% growth in number of branches on a year on year basis. So that is what is creating the larger OPEX for HDFC Bank. Let's also quickly move it therefore to operating profit. So your operating profit has gone up a solid 22% year on year. The top line really supporting operating profit, and therefore your operating profit holding up 22% above last year. Operating profit around the 18,700 mark, slightly above what most analysts were penciling in on the back of the slightly higher other income number. Of course, sustainability of other income is also extremely important. Let's now look at provisioning. Loan loss provisioning, 4,000 crore odd is where the loan loss provisioning was expected to be at. It's come in at 2,850 crore, 30% lower, and therefore you're seeing a very, very healthy return on assets as well as profit after tax. So profit after tax has come in at 11,900 odd crore, 950 crore to be absolutely precise, and that is a very healthy 30% jump on a year-on-year basis. So your PAT has grown very, very well. It's much better than what the street was penciling in. Your ROAs have come in above 2%, which is largely the benchmark for the banking sector. Now let's talk about the NIMs, which is net interest margins. We spoke about that 4.1% number. That holding up was going to be the key, because what HDFC Bank has done is it's grown its deposit base by 2 lakh crore in the last 2 quarters, which is literally 10% of its current deposit base has come in only in the last 2 quarters. Massive growth that they've seen on the deposit front. And what this essentially means is that your interest expense ought to be quite large. And if your interest expense is large, and despite that you are able to maintain your margins, it says a lot about what HDFC Bank is up to and the potential that it has. So of course more commentary on the way, but at the moment largely a steady set of numbers. The machine marches on.